So we're going to talk about a simple, easy topic to begin with, nothing hard. Mayor Bill de Blasio. It's a simple topic. So, a couple of years ago, he ran for mayor, and folks in the development community were very concerned that he would be, the worst thing ever, that he would be a real hindrance to development. Now we're past his halfway mark. How has de Blasio been for development, do you think? Friend or foe? Steve, what do you think?
I think the city is in pretty good shape. There's plenty of his policies that I agree with, and there's some of his policies that I don't agree with, but I think he's surprised the real estate community. And I also believe that affordable housing is a very important thing in New York City. We just don't have a city unless we have adequate housing for people who can work here. So I think, to me, my view is when you first get elected, it's hard to learn how to govern. Mm-hmm. And I think he's finding his stride a little bit. He's learning how to govern. He's learning how to listen to all the different constituencies in a pretty tough city.
Is he listening to the development constituency, Jeff, do you think?
So I would view it very similar to what Steve said. There was certainly a lot of hesitancy when he came into office. And he's right, the development community doesn't agree with some of the things that his policies. But he's really took a strong stand. For us, we're one of the largest affordable housing developers in the city, acquirers and developers, and he's really been very positive for that sector, and he's pushed for reforms that are probably needed. He pushed for real estate tax abatement for affordable housing, which he and the mayor are fighting over at the moment. Mm-hmm. He and the governor are fighting over at the moment, and we're all hopeful that gets resolved and passed soon, because it's true. I mean, you really need to add, not just create new affordable housing, but preserve existing affordable housing. We're going to talk about all sorts of high-rise luxury development today, and the truth is the city doesn't work without affordable. So
obviously affordable housing is one of the most important topics for both residents, and especially for us in the media when we talk about real estate. How do you kind of balance the need to make profit with creating affordable housing for the people who need it? Can you make money from affordable housing today? Jared, what do you think?
So I think that most of the developers in New York, they are pretty economically driven, and I think everyone wants to build nice projects. They want to give back to the community. But I think with the right incentives in place, you can accomplish both, where you can do projects. We just applied on one of the city's RFPs where we'd be doing a lot of affordable housing. But we looked at it like a project that we wanted to do. We thought it made sense. And if there's enough in there to make it worth everyone's while, then it can happen.
Do you think that developers get a bad rap as sometimes scapegoats for the need for affordable housing, maybe placed as the enemy?
Look, I think that there's always three sides to every situation. I think that every developer probably thinks they're a victim. I'm sure every tenant thinks they're a victim. I think that there's reasonable approaches to everything. But the great thing about this city is that despite all the different viewpoints, things keep moving forward. And it's always a communication between government, developers, business, public sector, private sector, and somehow it all kind of works.
Great. Abby, you and your work is very, very focused on preservation, historic preservation. All of you guys work with historic preservation. Steve, and some of the things you're doing, and Jared, of course, with the Puck building. How do you, number one, tackle urban preservation and historic preservation, but still sort of get the job done without running into too much opposition from landmark bureaus? How much of a headache can that be? And two, how do you also make money from it?
Okay. Well, first of all, I actually am not a historicist by any means, and I'm not someone who believes that historic preservation is absolutely the essence of what New York City is about. On the other hand, I'm a design-driven developer, and working with historic properties is very challenging. And I am known as someone who is good at working with communities, working with government agencies. I think we breezed through the Landmarks Commission on the Prince Street project, in large part because I understand the language of the Landmarks Commission, I understand the language of architecture, and I understand the language of community.
Has the landmarks process gotten harder or easier over the last few years?
They have remained challenging. I think the best way to describe it is they've remained challenging, but the commission is certainly has an understanding that modern architecture and design in conjunction with historic has a place, has a role. So one of the things that I work with is the juxtaposition of new and old. And in fact, that's what draws me to these projects, not the preservation of a particular property per se, but the adaptive reuse and the insertion of new and modern architecture into the property.
But for all four of you work with buildings that, many of which are conversions of existing properties that weren't initially residential buildings, they could have been commercial buildings. Talk a bit about what goes into determining if these projects are economically viable. Is there a tipping point where you say, we love this building, it's so beautiful, we wish we can convert it into, say, luxury condos, but it's just too expensive, or the cost would be too high to be passed on to the buyer? Tell me just a bit about the thinking behind that. Jared, I know you're doing the penthouses, for example.
So, obviously all projects you have to look at, in their own realm, but when you look at historic renovation of a building, I think that it's definitely going to be the most challenging of any of the projects you could do. Going ground up, everything has its own challenges, nothing's easy, but doing a historic renovation, you're going to deal with all different kinds of challenges that you didn't foresee. With that being said, it gives you the truest opportunity, I think, to do something very unique. And so purely from an enjoyment and a challenge point of view, you're going to probably have the biggest challenge, but you're going to have the opportunity to create the biggest and most unique product at the end of the day. So I've done now 5 or 6 historic renovations, and each one's challenging in their own right. We get better every time, but it's something that you really have the opportunity to take what was there and then create a modern interpretation of what it should be and adapt something that was for a different time, a different industry, a different era into today's day and age. And working with landmarks is always a challenge. It's always a challenge when I remember the first time I was doing it, and I was sitting before landmarks. I'm saying, well, I own the building. Why are they telling me what I can and can't do with my building? But by the time we went through like our 4th hearing and we got something approved, I looked at the product that we had and I said, you know what? It probably was very helpful to have people who didn't care about my profit or my product, and people who cared about the fabric of the city. And they were really safeguarding that, weighing in. And I think that the conversation that we had together ended up with us having a much better product, and it leads to a much better city.
Is there any building in New York City that would be your dream conversion, a historic building?
I don't really do. I mean, I love the buildings I have. I love the projects I do. I think that, sometimes I'll walk a project and I'll just feel like we're converting now these warehouses in Brooklyn that were originally where the Jehovah's Witnesses were printing their Bibles and their pamphlets that they hand out. And I remember walking through that the first time and just saying, oh my God, these are the best bones I've seen. I mean, this is one of the greatest canvases I've seen, in the city. And so I just got so excited that we jumped up and we bid very aggressively to get the job because I just wanted to do it.
Now you were sort of an early entry into the Jehovah's Witness conversions of all their properties. Their next big conversion is supposed to fetch, or the next big sale of their properties is supposed to fetch, upwards of $1 billion on the Brooklyn waterfront. So we're now seeing billion-dollar deals in Brooklyn, where Brooklyn was supposed to be, the new Manhattan. And so now it's $1 billion deal in Brooklyn. Are there still, and you are all in some way involved in Brooklyn, are there still deals to be found in Brooklyn? Is there anywhere left under the radar in this historic, storied borough? Steve?
I mean, I've got a slightly different view. I would suspect Jeff is going to share the same view that I have, which is whatever number you're hearing about the Jehovah's Witness trades, it trades at less. But it's a tough environment today in New York. It's a challenging environment. The construction lenders that we do business with don't want to lend. I think there's almost a sense that they're redlining condominiums out there today. And for all kinds of real reasons. There's plenty of inventory out there. My own personal view is it's a winners and losers market. Thoughtful development and And thoughtful pricing carries the day, and things sell when those two principles are combined. But
is there a numeric figure for thoughtful pricing? Because we'd all like to know what that is.
I think it's contextual, right? You got to look at the competition and just buyers are being very judicious. They visit a lot of sales offices today. When we opened up 150 Charles, we sold that building in 12 weeks. It was unheard of to move product like that in 12 weeks. Now, we can't be that smart. It has to be that there just wasn't a lot of development out there at the time, and there weren't a lot of sites to develop in the West Village. But that dynamic has changed. And I think New York City is a pretty fabulous place to live, but it's expensive.
Jeff, what about for you? Where's under the radar for Related these days?
It's hard to be under the radar. I mean, New York City is pretty much explored. There's not a lot of under the radar. It's a pretty efficient market. Land prices have escalated, pretty high. They've softened maybe recently, but it is efficient. And I think it's, as Steve said, that what sells is now great product. You actually have to be a developer today. You have to have talent and expertise to create a product that is differentiated from others. And we think that we do that well, and we're building both rentals and for sale around the city. Obviously, Hudson Yards, which I know you're going to talk about.
Definitely.
But we're about to launch a great new residential for sale product on Vestry Street on the West Side Highway, downtown. And I think you really study that market. It's there is real demand for great product, family-size units that is not, I'll call 57th Street pricing.
Right.
So as a company,
we call it affordable luxury.
Affordable luxury, right? So exactly, as a company, we've really said, that very, very high-end 57th Street corridor was a market. We don't have any buildings there on purpose because we thought it was really more gambling than investing from a developer's perspective. It was very dependent upon what was going on around the world. First we had Russian buyers and Chinese buyers and Middle East buyers, and it changed all the time depending on what's going on any given moment around the world. And when you develop, you start in one market and you end in another market,
right.
And what could happen between those 2 points could make a deal work or not. And so we've always tried to target the very high end, the highest end of the domestic kind of New York buyer market. And if you look at our buildings, ultimately in the past, our lights are on at night. People live in our buildings. They're not really speculators. They're not investors. Our foreign or international count is very low. And I think that's a market that we're comfortable throughout the cycles.
Now, I know that Related has invested a lot of time and energy recently into rentals. That's a big market for you, high-end rentals. So why rentals?
That's really where we started. I mean, our background was always in rentals. In fact, we're just opening one across the street, the East End, next week. And again, that will be real targeted for family-size units for the great environment that we live in around here. I mean, rentals. If you were to ask me as a developer, would I rather build rentals or rather build condos? We'd rather build rentals all the time because, I mean, you build a product. When you build condos, you have one shot to make a profit. You don't know which market you're going to wind up in. You could do great if you hit it right, or you could not have that opportunity to make profit. And then you pay a lot of taxes. Uncle Sam takes 55%, and then you're done. You work on this for 5+ years, and you don't own anything at the end. With a rental, you put in all that time. You're not really as dependent upon the market because if you come in at a bad time, over time that market could change, and you don't pay as much in taxes as
right.
you would in condos, and you have an asset that. If you believe in New York City, which clearly I do and we do as a company, the best way to make money in real estate is just to hold on to these assets. And kind of that rental stream allows you to do that.
Now, all four of you are clearly involved, of course, at the high, if not the highest end of the market, in some of the projects you are developing. And those are a very specific targeted buyer. There's only so many people who can afford to buy these kinds of projects. There's, of course, was a lot of talk about the importance of foreign buyers, in New York City, and that sort of softened recently. The Chinese have pulled back, the Russians are having problems, the Canadian currency is having problems, oil's very cheap now, so the golf people have less money. So are foreign buyers still really important for the four of you? And if so, where are they going to come from next? Or where do you hope they're going to come from next? Or where do you see them coming from next? Abby?
Well, I only have one residential project underway right now, and I never anticipated that it would be a project that would draw foreign buyers. It's not in Midtown. It's a low-rise project. It wasn't the market that I thought we were targeting to begin with. So I don't feel on that particular project that I'm going to personally see where that market is. I do think that in terms of just the volume of units that we have to absorb in luxury, super luxury units that we have to absorb in New York City, the foreign buyer remains an important piece of that market. And to the extent that that's softened, it will have an impact, dampening effect perhaps on some of the lenders. We do need to see a continuation of a participation in the market by the international flight capital and other things that have come here.
Stephen, are you concerned about a softening of the international market for some of your projects?
Well, I mean, we like Jeff, and I'm sure like Jared and Abby, study who buys in our buildings. And for the most part, it's been New York domestic. On the other hand, the Russians are not in the market. They used to be. There'll be a time when those sanctions burn off, and they'll come back into the market. And the only thing that's stopping the Chinese from coming in here, for anyone who does business with the Chinese, is that it's hard for them to get their money out of China. It's got to come through the Cayman Islands. There are all of these blocker-like structures that they've got to organize around. So it's difficult for them to transact. But that said, foreigners still want to own New York. New York is a really special place in a volatile world. So has oil down at $40 and $35 a barrel stemmed the tide? Yeah, I think it has. But on the other hand, there's still plenty of sales in Manhattan. We opened up 111 Murray, the Fishers, Howard Lorber, and us, and we're 7 months in the market, and we sell our inventory at 7.5% a month. And Jeff's in the business a lot longer than me, but I think 7.5% a month, he would agree, is right on average pretty rocking inventory to sell on a monthly basis. So things still sell out there. I think if you price thoughtfully.
And we've been reading a lot about sort of a softening in the luxury market, and especially the ultra luxury market, and developers or real estate agents creating special sort of incentives or programs or little pushes to get the buyer to buy in that market. Are you seeing yourselves have to kind of incentivize a bit stronger to get the buyer into the upper end of the market? Are you pushing?
I mean, we haven't given discounts at 111. We haven't sold not $1 of discount below Schedule A, and in some cases we've raised some prices. What we've done, however, what we haven't done is done blanket amendments, which seemed to be the flavor of the day in late 2014 and early 2015. You go down to Miami, you'll see steep incentives down there. But down in Miami, you have a perfect storm of a number of things. You had a foreign buying profile from South America that was very, very much levered to the Chinese, to what's happening in China. And as GDP fell down there and as oil prices came down, all of those currencies got slashed. And so now you see developers who are upping brokerage commissions in a pretty large way. But I haven't seen that in New York, Jeff. I don't know about you, but I've not seen not one example of that in New York.
I think people dramatize the kind of softening of the market. You've got the very, very high end that has softened for all the reasons we just talked about. We own an interest in core real estate, and Sean Osher's here. And we just had in our resale division our highest sales quarter ever in history. So, I mean, what does that tell you about the market? It's really about price point and great product. And so, you look, we converted a building right around the block here, Carnegie Park, and we sold 400 units in a year. I mean, it's a great family product at the right price point. We're bringing to market the Robert Stern building I mentioned downtown. We're selling a Zaha Hadid design building in West Chelsea. It's about design, it's about great units, and not pushing the price to the point where people can't afford it. You got to price it right, build a great product. There's still plenty of people that want to live in New York City.
So Jared, you, for example, have still working on the Puck penthouses, which are a really special 6 penthouses atop the Puck building, which is obviously one of the most iconic buildings in downtown New York. And those entered the market at the absolute top a couple years ago. Would you do a project like that again today? Is it still the right time for that kind of project?
Yeah, look, the thing I always look at when I'm buying a building, and I think it's the thing that all my friends always call me whenever they're buying a home and say, well, should I buy it, should I not buy it? And I say, look, if it's something unique in New York, it always goes up in value, if it's really one of a kind. And so that was actually the first time I've ever done a condo job. Most of what we do is rental housing. We're doing a lot in Jersey City. We do a lot in the East Village. We do a lot throughout the city. But I thought it would be really fun to do a high-end condo project. And so we took this space that was truly unique. We created 6 very, very unique residences, and the ones that we've sold at record-breaking prices for the area. So, and not only that, I've actually sold to people who have really enjoyed it too. So, I think there is definitely a satisfaction you get from condominiums where you can create something that really is unique. You spend all the time thinking about how somebody's going to live, how do you optimize, and you probably spend money doing it too that you wouldn't spend for your own self. So. It is kind of fun to dream and to do these things, and then to see people enjoy it is a very special experience.
Now, all of you have sort of made your marks in some way by recently betting on neighborhoods. I mean, you are betting on Nomad, for example. They are north of Madison Square Park with your beautiful condominium project there. And Jeff, related, of course, is developing Hudson Yards. I guess when you're sort of a first mover into a new neighborhood, or in your case, almost creating a new neighborhood, what is the key objective? Is it to place the neighborhood on the map? Is it to get tenants? Is it to sell apartments? Is it all together? What are you trying to really accomplish with kind of being establishing a neighborhood with your developments?
So Hudson Yards has been truly, if you love the development business, there's nothing like this. We completed Time Warner Center about 13 years ago, and there were a lot of lessons learned from Time Warner Center. And Time Warner Center was very successful as a development, but when we studied it after the fact, if you really look at what happened, we built a neighborhood around us. Right. It wasn't the highest end neighborhood. Land prices, as a result of Time Warner, 15 CPW was developed, became some of the most expensive condominiums around. So when we were designated in 2008 for the rights to develop Hudson Yards, we kind of thought about that, and I sometimes call it the most legal insider trading that's ever been allowed. And kind of we knew what we were about to do and the impact that it could have, and so we went and bought as much land as possible around.
How much did you buy in total?
So we now own about 28 acres of land.
How much did that
in Midtown Manhattan.
Cost?
A lot. We have the development. We have the rights to build about 20 million square feet of development. Hudson Yards is it's the largest private development ever done in the United States.
Right.
With office, retail, residential, hotel, schools, parks, cultural facilities attached to the High Line.
Subway stations.
Brand new subway station. So I mean, it really, it's not just building a building. It's building a city, with a real obligation to do something incredible for New York City. And you start looking at about kind of what happened in West Chelsea. West Chelsea is the fastest growing residential neighborhood in New York City today, in terms of rents and selling prices, and some great design and buildings that have happened along the High Line. And you take all that, and you have an obligation to do something terrific, and that's what we set out to do. And if you look at kind of how you make that neighborhood, you can't build when we think about mixed-use development. You have to bring it all online at the same time, because no one ever wants to live or have an office in a construction zone for 15 years. And so you can't build 15 office buildings because you'll never fill them up.
So where are you now? What's the sort of Hudson Yards news for this now?
So just to finish the thought there, so what we did is we basically took an office building, a retail building, another office building, 2 residential buildings, and a hotel, and it's all happening at once. So right now, of the 20 million square feet, we have 10 million square feet under construction, fully financed. We've leased 7 million square feet of office space to Coach, L'Oreal, SAP, Wells Fargo, KKR. And so really creating, a place where if you would have stood back 3 years ago when people would have said, I'm never going all the way over to the west side, when you start thinking about it, people don't think about that anymore. Of the new subway, the Lincoln Tunnel, access from the ferries, we're in Midtown. And so what's happened to date is this has been a very, very much a B2B story. So we've been talking to brokers and talking to CEOs from large corporations. But you asked what's exciting now, we're just about to go into the consumer side of Hudson Yards, and you'll start seeing in the next couple of weeks a consumer campaign really telling the public what Hudson Yards is all about, the great culture, the great parks, the great restaurants that are going to be there. Neiman Marcus is anchoring our department store. And then in July, we're going to launch sales of our first 2 residential buildings.
And I know that one of the big draws for Hudson Yards is the High Line. So how did you integrate the High Line into Hudson Yards, and how did you get all of those agencies to agree to allow that to happen?
So a lot of this was really all teed up by Bloomberg, and so we didn't have to. It was all kind of part of the package that we bid on in 2007, 2008. But today, if you think about the High Line, you have the Whitney at the southern end on 14th Street going straight up to 30th Street where it curves and basically dead ends right into Hudson Yards at the High Line level. So you could walk from 14th Street to 30th Street onto our deck. We're building over the active train yards, which you won't see anymore. It'll look like Park Avenue. No one really thinks about that as a train yard. But you'll walk from the High Line onto our deck into our buildings.
Right.
And so it's really going to be pretty special. And then it wraps around the whole balance of our site. And we've created this incredible plaza that's being built now that will just kind of be the terminus to the High Line with this incredible piece of sculpture, which we have not shown anyone yet. But it's a $200 million piece of sculpture that will sit in the center of this plaza, which will really be an icon for New York City.
And Steve, you've been very invested in the Nomad neighborhood. I'm just curious why that neighborhood was so appealing to you.
Well, when we first bought that building was less about the neighborhood. Now, the good newspaper story would be we picked that neighborhood, but the truth is, we were buying a vacant building that had the possibility for 3 potential uses. We could have went office with it, we could have went hotel with it, we could have gone residential with it, or some sort of combination.
This is the Italy building, is that correct?
No, it's the building just north of.
Sorry, just north of it. Sorry.
Building. And so, in a 30-year career, every single time we found a property in New York City that could have multiple uses, it was hard for us to lose money on it. So the execution strategy was very, very much in buying that deal, and we bid at an auction for it, was very, very much about the optionality of being able to do a hospitality deal there or a residential deal there, or alternatively, an office deal there. And just to show you about when we first put that building into service, just to show you sort of how we didn't quite get it, we had the sellout there pro forma at $1,800 a foot. I can remember like it was yesterday talking to Jeff. He may not remember this conversation, but we knew he was coming to the market slightly early. I think we were out at the Deutsche Bank conference or something. And I said to him, we're going to be a big cheerleader for your sales program over there. We ended up averaging $3,000 a foot. And so, who would have thought it, right? I mean, we were nervous. I remember being at that auction, and we were at the bids were going up in increments of $250,000. And we fully intended to drop out, at that last $250,000, and we just ended up winning the bid. And obviously, we would have bid a lot more aggressively if we knew where the price was going to go.
So would have everybody else.
Right. But we didn't know, and that's sort of my point.
I'm curious, for all of these kinds of really large-scale projects in neighborhoods that are still kind of ascendant, or in neighborhoods in your case that don't even really exist yet, there has to be a level of community opposition. So how do you negotiate community opposition? How do you ensure that it doesn't halt the project, but how do you also ensure that you're able to bring the community into your process? Jared, how do you deal with that?
So we really haven't done anything at the scale of what they've done, where we've had real community opposition, so I wouldn't know.
Not yet.
Yeah.
What about you, Steve? Have you had any issues with community opposition?
Well, I mean, first of all, I think I was listening to what Jared said before about when you took the project through landmarks. I think you were talking about it, and that's our way. Our way is where we believe that you've got to collaborate with. We've done plenty of ULURPs out there, and not one has been unsuccessful, and the reason is we go in probably following the pattern of Related, because there's plenty of developers like me in this business who follow the pattern of the most credible development company in the city of New York, and that is getting your ear to the ground and listening to what the community wants, and making sure you can deliver and still be able to still not have your project gutted. So the West Village was a great example of it. Jeff was taking it through Jeff was building Superior while we were going through that whole downzoning in the West Village, and there was so much talk out there about what we intended to do at 150 Charles. We were actually at a point in time called into city planning, and we were asked if we were trying to do an end run about what we were proposing, a lower scale building, and we really intended to come back to the city at a point in time and say, we can't build that, we're really going to go and build a 32-story building. And it was almost, I was incredulous, because I mean, my word is my bond, and of course we delivered a contextual building, and we're proud of it. So, but there's a lot of cynicism out there.
Right.
I think you gotta sit with community people, and you've got to say to them, you got to tell them what you're doing and why, and then I think you have to present yourself as a partner in that.
Is there a point where you'll walk away and just say this is just not worth it?
Well, we never had to.
You never had to.
Right? I mean, we certainly would walk away, but we never had to put our foot down and engage in brinksmanship, because we were always prepared to be reasonable with people, and we found that people in New York City have been reasonable all the way back.
Now, Abby, also for you, I mean, you create very small scale, almost boutique developments. So what is it about a neighborhood that makes you want to be there? How do you decide where you want to lay your foundations?
Well, that's an interesting question, because kind of going back to your notion of how to work with community, what I think about was in 2001, right after 9/11, the state of New York put an entire city block in downtown Brooklyn on the market. And I was the winning bidder for that site.
Where was that?
It is between State and Schermerhorn, Smith, and Hoyt. It's right adjacent to the criminal court house on one side, the house of detention, the men's house of detention. It's one block north of Atlantic Avenue, and it was a wasteland. It was actually a parking lot, and it was a parking lot that sat on top of a subway, an active subway. And so you ask me, what would make me go and want to buy this site? And what it was a walk that I took down State Street that fall day. And on one side of the street, the side that my development was going to look onto, was a beautiful historic block. And all of a sudden I realized that I could anchor the site back into the fabric of the neighborhood. So what I need to find in my developments is a way to connect to some part of the fabric of the city. And in this case, I was also able to think of a way to deal with affordable housing in a fashion that no one else was thinking about. At that point in time, 80-20 was the program that was the norm for building affordable housing. You could not make that work financially in Brooklyn. Mm-hmm. So I was an urban renewal site. I needed to provide 30% affordable housing. So I worked out a deal with the city, and I was able to bring in a not-for-profit developer and have them build supportive housing, which is housing with social services. Mm-hmm. I had to sell that to the community. So it was actually a very complex deal, and part of the deal in working with the community was by putting townhouses right across from the existing row of historic townhouses. I immediately, rather than condos, rather than any other use, immediately was able to get the support.
So you were
of
able
the
to
neighbors.
to leave your mark as part of an existing mark. In a
Right,
way.
and have them feel comfortable that if I was going to invest in these new townhouses and make the value of their townhouses go up, which they absolutely did, then having supportive housing on the same site was not going to affect their values in a negative way. So it's about thinking creatively and working with the community. That community had fought affordable housing on that site for 40 years in the courts. They were completely against affordable housing. And we were able to persuade them that it was something that they could accept.
Now, totally sort of changing gears. Jared, you run the New York Observer. And Steve, I think according to our esteemed paper, you were one of the major people you're one of the key people who was interested in the daily news. So there seems to be a lot of interest by real estate people in newspapers. Why are real estate people so interested in newspapers? Why do they find them interesting businesses to run?
Well, so we bought the paper, I guess it was almost 10 years ago now, and it was at the time it was a very interesting thing. I mean, the media business was a different thing at the time, but what I find is that a lot of our success in real estate really comes from following the things that we get interested in, and I think that a lot of the different neighborhoods we've gone to have really come from working with different companies and seeing how things were changing in terms of how people were living or where they were living or how people were working or where they were working. So at the time, the business seemed like a very interesting business, and then being a part of the change in that business has been a very interesting experience, both in terms of running an operating business, which I don't run. I have people who run it, and they do a much better job than I could do, which is great. But also seeing that business transition from really a print predominant business to now a digital predominant business, and then managing the cash flow and the profitability of it, that way has been a very interesting thing to see. So I think it touches a lot of different aspects. It's obviously an interesting business, and but again, seeing how the different employee sets and how the different advertisers. I mean, you talk to the advertisers, you understand luxury retail. You speak to your reporters or your salespeople. You see different people, how they're living in New York, where they're living, where they want to live, where they want to be. And that's actually a big reason why we started looking at Brooklyn, 5 years ago, because I saw that in all the different technology businesses that my brother was investing in, and all of our best creative people were all living in Brooklyn and loving it. And I used to think that Brooklyn was a place that I used to live there. It's funny, we're doing a deal with Ian Traeger now, and he was telling me how he was dying to do something in Brooklyn. He says, I grew up in Brooklyn. All my life I was trying to get the hell out of Brooklyn. He says, now I'm dying to get back into Brooklyn.
So is the paper a way for you to get ideas of where it might be good to consider projects?
No, it's just interesting. You see a lot of things, you meet people, and it inspires ideas, which I think make you better in different ways. And so,
is it a challenge to keep all the divisions separate? Because obviously there could be overlap between the real estate businesses, the media, advertising issues. Is there sort of a brick wall that you erect between the businesses?
Well, it's more than brick wall. I mean, they're just in different offices.
Yeah.
They're run by different people, and look, there's always going to be conflicts to anything. If you don't want conflicts, just go in your apartment and stay there and lock the door, and don't go to work, don't do anything. But as it comes up, you trust people to do the right thing, and we found that we really haven't had any issues.
Great. Abby, I want to go back to you for a second. It's real estate, especially the real estate development, is a pretty testosterone-laden industry. It's a pretty male industry. So I just wanted to ask, what's it like being one of the few female developers in the city? And do you still think there's a lot of room for improvement in balancing the genders in real estate? Not to put you on the spot.
No, you're not putting me on the spot. This is not a level playing field. We know that. This is not a level playing field in business, in big business anywhere. However, it's very different today than it was when I started in the business. I'm no longer the only woman sitting in the room. I remain one of a handful of women who owns a development company. And I am encouraged by the number of women I teach now, and hope to start seeing in the years to come that some of them will go out and actually start a company. But it's a capital-intensive
Right.
business. I did not come to the business through a real estate family, though I've been asked numerous times, whose daughter am I?
Right. Are you still asked that?
No, because Hamlin Ventures is known a little bit better, but but it's not a level playing field, but it's one that's improving, as is the business world in general, though plenty of room for further improvement, both on the political front and on the business.
Do you feel an obligation to be part of that improvement, to be part of that process?
Absolutely.
Do you mentor?
I mentor, I encourage, I spend a great deal of time working with young women. Some of the young women who have worked for me, I have seen move into companies here, and I absolutely feel that it's part of my responsibility. It's a great business. It's a great business. It's a creative business. It's a wonderful business. It is testosterone driven. That's not my personal way of dealing with it. What I can say, if there are any women out there who are thinking about development, you can do it your way. You can succeed. You can do it your way. I've done it my way. I feel incredibly lucky. I've had wonderful male colleagues and wonderful male people who I've worked with over the years, but it absolutely is not a level playing field to begin with.
I wanted to ask sort of another sort of odd question. All of you work with a lot of, star architects or celebrity architects, celebrity interior designers, or celebrity hoteliers, celebrity restaurateurs. You're having fancy chefs in your project at Hudson Yards, and you're working with Ian Schrager, the ultimate celeb hotelier. Do you think we'll ever enter the era of the celeb developer, and do you want to? Oftentimes, the one person whose name isn't known in all these projects is a developer, the person who's making it happen. Do you think that'll change? Do you think that developers will begin to have the prominence of these other people? Steve, what do you think?
Well, I mean, speaking for, as an observer of Related, I think that, they're pretty close to that status. I think, there's a general acceptance in the marketplace, and it's probably what all developers like me and Jared and Abby would strive for. People, I think, generally say, you live in a Related building, they're gonna build it correctly, they're gonna deliver it, and if there's a problem, they're gonna fix it.
Commercial here.
I think he likes it.
It's pretty good.
But is there is there a tension between wanting your product to shine and also taking some of the light for yourself?
I think when you grow a business to a certain scale, it's no longer about an individual. I think we've tried very hard at Related to build a great team of men and women that run our businesses. And I think today we have some of the best real estate talent professionals in the business, and I think that's what's really enabled us to succeed and hopefully to create the reputation that Steve was talking about. And I think that's much more important than an individual. But certainly, there are developers that are about themselves, and that's their brand, and that's a different way of doing it.
So we're going to open up to questions from the audience shortly, but I want to ask all of you. It's a bit of a cliche question, but I think I always want to know, what is the one building or type of building that you still dream of building in New York City? Abby, what would you, if you could have any plot of land and build anything you want, what would that be? What would it look like?
I would have, until relatively recently, said, I have yet to build the high rise of my dreams, wherever that might be. Mid-rise is as far as I've gotten. But I've changed my thinking, and I really prefer thinking about neighborhoods and building context within neighborhoods.
Is there a neighborhood that is your dream neighborhood, your fantasy neighborhood?
I'm pretty happy in Nolita, I have to say.
Okay. And what about you, Jared? Is there a building that you still dream of building, or your fantasy building that you could create in New York City?
Yeah, we're working on it.
You're working on it. Puck Building?
I'm sorry?
Oh, you want the Puck Building or something in the future?
No, something else.
Oh, you gonna tell us about it?
No.
No, okay. All right, so on that note, with Jared's secret, we have some questions from the audience. All right, here's a good one. I'll just read them. I won't edit them too much. It feels as though every new development is targeting either the high-end luxury tenants or affordable housing? This is a good question. What is being done for the middle classes?
So I'll take that one. So we're about to launch a, I guess, middle class. One of the weird things is I grew up in New Jersey, and I was talking to a friend the other day who's looking to move out to New Jersey, and we're talking about what he could afford. And what's interesting is, like, if you spend $1 million in New Jersey on a home, you're buying a major mansion. If you spend $1 million in New York, it doesn't really get you much, which is kind of crazy when you think about that on a relative basis. So when you say middle class in New York, it's something that I think has a little bit of elasticity in terms of what it could mean. But we're launching a project now which we're very, very excited about, which we're just waiting on AG approval to launch. We're doing a condo conversion in Williamsburg, which will have probably a average price about $1.3 million or so for the units. It's this great Cass Gilbert designed. It used to be a warehouse for the Austin Nichols Company right on the waterfront. It was converted to a residential building, and we're very excited about that because we think that will really be a great environment for people who actually want to live in a neighborhood. And so I think that what we're seeing in the market is that it's very hard to build stuff and make money at, call it, $1.5 million average ticket price today. But if developers do that, we're seeing a lot of tightness in that market and a lot of demand from people who want to live in good product with all the different things that we put into the high-end buildings, but why not put it into kind of the more affordable buildings as well, and then drive something very, very nice.
Jeff, are you guys sort of going after the new middle class as well?
So again, middle class is in New York, and people would never believe what that means. But look, we develop across the spectrums from real affordable housing to something we call workforce housing. We just finished 1,000 units in Long Island City. It's called Hunters Point, where we built to basically up to 165% of what's called median income, roughly $110,000 at the top end. And so that's been a great product. It's something the city needs more of, workforce housing. And then you also have, what you might call upper middle class, which is, some of the conversions we've done, like Carnegie Park here, where we built, from $1 million to not particularly middle class, but say $5 million price point. And for New York City, that
middle class-ish.
I say, well, one started at 1 million, so 1 million, and that's, versus the crazy numbers that you hear for larger units.
So here's a fun question. A couple years ago, it was all about the rich door, poor door controversy. Everybody was up in arms. It consumed the media. We at the Post had a field day with it. It made developers bad guys and affordable housing people good guys. Blah 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 blah. So what could be in your mind the next rich door, poor door scandal in the real estate community to affect you guys? Abby, what do you think?
Thank you. Just scandal. I'm not exactly
Controversy.
out there.
Controversy. What are you seeing bubbling up that's getting a lot of litigious type attention in the industry?
Yeah, Jeff has some. You have an idea.
The obvious one that's been all over the press is this real estate tax abatement program called 421A, and the renewal or not renewal of that program. And I mean, as an industry, I think it's critical for. Without it, you'll have essentially no production of affordable housing, but even more importantly, you won't have production of rental housing at all, because the tax system here, the real estate tax system here, is really not very fair or efficient across the different classes that are taxed, and it particularly hits hard on rental residential buildings. And so without a program like that, you won't see anything. Now, the controversy comes from that 421A had historically been available for condos of any price point. And so you saw the $20, $50, $100 million condo getting 421A tax abatement.
Because they need it.
Because they need it.
They need it.
So the thought of 421A coming back for condos, or whether it does or doesn't, certainly I think that if it does, it will be capped at a price point so that.
Does it bother you personally when you hear that an apartment that costs $50 million is paying the same taxes?
It shouldn't be entitled to that abatement.
Okay. How do you all feel about this issue? Similar?
Very, very similar. It should never have been used in that way, but it's critical to build certainly rental housing that is in some way affordable.
Right. But can I just weigh in here for 1 sec? It's not my project. and that same developer had a pour door, and that's not necessarily what I would have done, not because it's illegitimate. He did what he was allowed to do. I just actually think that people from all socioeconomic levels like to mix together. I believe in that. But with regard to the building we're talking about on 57th Street that got 421A, I actually give him plenty of credit for starting that job at a time when a lot of people were not starting. And, you know, in New York City, there's a tendency to sort of Monday morning quarterback and look back. That took a lot of chutzpah for him to build that job. Many construction lenders, traditional mainstream senior credit construction lenders, who Jeff has been doing business with for 30 years, and I have as, well, not quite for 30 years, because I started development maybe about 15 years ago, but they were not in the business to lend money. And so without 421A, I think it's pretty likely that job doesn't start. It's a union job, plenty of jobs issued because of it, and most importantly, that job had a halo effect in New York City. Other people began building. It led to all kinds of other...
Do you think it was worth it, the 401k tax payment for them?
I just think this rich, poor debate that generically we're having in this country leads to a conclusion that that particular developer was subsidized for something that he shouldn't have been. Mm-hmm. And the fact of the matter is, I don't believe the project would have started. Now, maybe it would have started a year later. Right. But no one knew it at the time that 421A was being applied there.
We have another question from the audience. So this audience has very good penmanship. I'm very impressed. There's a lot of talk about market correction. Do you agree? And if so, do you foresee the correction in every segment of the market? Jared, what are your thoughts on that?
Sure. Well, there's always market correction. I think the markets are always correcting up and down, and it's a fluid market. You know, when we look at a project, the number one thing I always do is I'll stand on the site and I'll say, if I close my eyes and look out 10 years, do I think this will be a lot better in 5 years, 10 years than it is today? And I think that, you know, markets are fluid. They go up, they go down. But if you look at, you know, New York City over the horizon, you're going to see, you know, tourism, I think, is at 55 million. People say, well, the dollar is very strong now. Maybe that will drive it down. Yeah, maybe for a year, maybe for 2 years. But, you know, over time, I think that goes up. You know, you look at, you know, home prices, people, foreign buyers aren't buying. You know, maybe this week, you know, maybe next week it changes. But what I've seen in New York is that it's an amazingly resilient city. There's a lot of strong drivers. You know, one of the amazing things that Mayor Bloomberg did here was he really helped us diversify the economy away from just financial services and law firms. So you have a rapidly growing creative services sector, a rapidly growing technology sector, and you know, and financial services and law firms are doing okay as well. And so I think that we'll continue to see growth. So if we correct, I think that that's a very healthy thing for the market. I mean, I think that one of the things that people don't appreciate as much about development is it really takes a lot of thought, a lot of effort, a lot of risk to get these projects off the ground. And I always joke that, you know, the project we're talking about before, 157, you know, Gary built that building, and then, you know, you have 40 other developers who look at the pricing he got, and they said, oh, I've got a unique idea. Let me build, you know, a similar project in a similar area with similar pricing. And the problem is 40 guys thought of it, so they all came up at the same time. So, you know, you're going to have, obviously, you know, less absorption in the product that's out there today, and that's just natural. But what's happening now is nobody's building competing product to that, and at some point, that will reverse. And so there's always corrections in the market. You just have to, you know, build the right capital structures to stay. You know, you can try to predict where it will go, where it won't go.
Do you think people put a bit too much meaning into this term correction? Are they a bit too over-fearful of it?
I think that people are always hysterical, and I think that, you know, no, but I don't mean that in a critical way. I just mean that in just a very, like, factual way, in the sense that, you know, you see one thing, people react, and then the media will go and go and go, and all of a sudden there's a crisis, and then, you know, you start having sales, all of a sudden there's an amazing rebound. And so people are always looking for the narrative and the trend, but, you know, we just try to look at the data, and I think, you know, over the long term, if you have good resiliency, you know, we are in an amazing city, and you'll find that that will do well.
Somebody asked, somewhat randomly, I suppose, but somebody asked, and all of you must answer, what's the future of development in East Harlem? So do any of the four of you have your eyes on that neighborhood? And if so, why so? And if not, why not? Jeff, what are your thoughts on East Harlem? East Harlem, talk.
So we actually own a lot of affordable units in East Harlem. There have been several developers building market rate housing very successfully in East Harlem. We haven't. There are a couple of sites on the market now. It's interesting when you look at Manhattan south of 96th Street. Today, it is almost impossible to buy land at market prices and build rental housing, certainly not without 421A. And so if you really believe in kind of rental housing as part of the New York City fabric and always in demand, you have to think about places like East Harlem where you could buy land that's a little bit more affordable and think about how you build a product where you can get rents higher than the market to support what you would develop there. So it's certainly something we would look at.
What about you, Steve? Is East Harlem?
I started up there, so I've got a great fondness for East Harlem. And East Harlem there's a renaissance that's happened up there since I started in the business in 1986. So, no, we would look up there. Jeff just told me there's a few sites, so now I'm going to end up being his competition. No, we'd build up there. I like it up there. I'm very comfortable up there, and I think East Harlem is on a real upward path.
I'm just curious of the thoughts of you four. I mean, we're talking about East Harlem. We're on the east side here. Clearly, the big news on the east side is the Second Avenue subway, which obviously is, folks in every sense of the word are expecting it to impact real estate prices and really cause a boom in this area in terms of real estate prices. Do you and obviously we've waited 100 years for this subway, so there's been a lot of time to speculate. Do you think that the Second Avenue subway will deliver on a real estate basis as has been anticipated? Abby, you're a keen observer of urban trends. What do you think?
I think infrastructure, transportation, and infrastructure are incredibly important to value creation, and because just the new subway at Hudson Yards, it will have an impact. Right now, it's having an impact for the next however many years until it's done with just the street being opened up and it being really difficult. But absolutely, once it's up and running, I think that not just on Second Avenue, but really any place that then has better transportation into the areas where people work and give them the ability to move better, I think the values will go up. And if land is available, one of the things that we're all faced with is the dearth of available sites at prices that are appropriate for their markets.
So all of you have spoken repeatedly about a lack of land. So my question is this: is there not enough land, or are there too many developers?
Too many sellers.
Anybody?
There's too many sellers that want prices that developers don't want to pay. That's probably it.
And Jeff, are you guys looking around the Second Avenue subway catchment area? Is that something you have your eyes on?
Well, we just are finishing this building right up here on 3rd Avenue, the east end. But I think it's going to have an amazing impact more on the eastern blocks, which really had no subway access. So York and First, I think, could see a real resurgence.
Somebody asked about zoning. What is the risk that residential development on the Upper East Side gets shut down via aggressive changes in zoning and/or more aggressive designation of entire neighborhoods as historic districts? This is a very comprehensive question and very well asked. So, what is the risk of areas like the East Side being zoning changes and institution of more strict landmark regulations? Is that something you all are worried about?
I think the mayor, I'm not particularly worried, I think the mayor right now is really focused on getting the mandatory inclusionary housing zoning across the neighborhood, it is passed, but getting that underway, getting all of the changes that he hopes to see happen, and probably won't in many neighborhoods because of the market, but I think the focus of this administration is not going to be on rezoning the Upper East Side.
No chance.
It's not the area that's the focus.
Would that just be sort of a futile activity on his part, do you think?
No, I just don't think it's his objective. I don't think it falls into his objective.
Here's a question. the Mayor de Blasio has been incredibly vocal about the need for affordable housing. Obviously, the idea of affordable housing is, in his mind, to sort of level the playing field for people in New York City, level the playing field for families, make living in New York more equitable, make living in New York more fair, which is obviously, I think we would all agree, a noble goal. We all want people to have equal access to quality housing. I guess the question for me is, do you think that affordable housing will solve that problem? Is affordable housing sort of the way to ensure an equitable quality of life in New York City? Is he on the right track with this?
It's an important factor. It is not a panacea, and it's not a solution. And let's just remember that we're living in an environment where we have very little federal interest in supporting the affordability of housing anywhere in New York City. We have a tremendous issue with our NYCHA housing, our public housing. We have issues with education. We have issues with the economy. So affordable housing is a critical element. I think the mayor is on track by saying that this is something important for our city, but it's certainly not going to solve all the problems of our city.
Steve, what do you think about that? Do you think affordable housing will deliver what the mayor thinks it will?
I think we have to have it. We have to have affordable housing, because if we don't, you're not going to have people who businesses need to employ. You're not going to be able to. They're going to be forced to live in too far of a circumference to New York, and it's just not going to work for the city. But I also don't believe that affordable housing levels the playing field. I think that jobs do. Mm-hmm. And you saw it with the renaissance of East Harlem and Washington Heights and Inwood, where Larry and I started buying in the late 1980s and the early 1990s. What changed those neighborhoods was a police presence that shut down crime so working class people could go out at night, and jobs. That's what did it. And jobs is what creates equality. And so I don't think affordable housing does. I think we need affordable housing for people who are earning a living and simply are being pushed too far in terms of the travel distance to New York City if they're going to work here. But we need jobs. And Jared hit the nail on the head. We've had some pretty good government in this town. I mean, I'm not sure that there's ever been a mayor who woke up one day and said, Dodd-Frank is a terrible law. It's anti-New York. I mean, when I worked for Senator Javits way back when as a legislative aide, I say it all the time, I couldn't imagine Moynihan and Javits, two people from different sides of the aisle, ever voting for Dodd-Frank. I'm not a banker, but it's anti-New York. I mean, it has led to a bleed-off in financial jobs in New York City. So it's beyond my capacity to understand how the New York City congressional delegation, and I voted Democrat and Republican, so this is not me taking any sort of side of the political aisle, but I can't believe anyone voted for that from New York City. But I will tell you this, but for Mayor Bloomberg, with that tech initiative, I mean, New York City today is the second largest generator of tech jobs in the country after Silicon Valley. That's incredible.
Right.
Software engineers don't go to Boston anymore. They come here.
Go to Roosevelt Island.
All of those angel funds and venture capital funds have come here to raise capital because of what's happened from a tech perspective. Witness all the tenants that Jared is putting into his Dumbo buildings down there, and what happened in Nomad with all of those, and it's had a percolating effect. So you have jobs, you got a really good thing going on. And when you don't have jobs, for instance, it always surprised me that Miami's 3 jurisdictions never came together, put together a job czar, and looked for corporations to come in there. They've been losing corporation relocations to Atlanta and all these other southern cities for the last 30 years. But we don't lose them in this town, and that's the reason why Jeff opens up a 20 million square foot development deal, and I don't want to say like this because we've had that discussion, but in fairness, leases 7 million square feet of space.
So that's
pretty outstanding.
So we're just about out of time. So we're going to ask just one last question. I just want a simple yes or no answer. It's a question you've probably all been asked before, probably asked every week at some dinner. Fear of a housing bubble. Does it keep you up at night? Yes or no? Jeff?
No.
Abby?
No.
Jared?
No.
Steve?
No.
All right. Well, then I guess we're in good hands.